Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in for this edition of Macro Mondays. It is Monday, April 7th, 2025. Hope you had a good start to the week. Markets a little bit better today than last week. But with respect to macro, I do want to talk about, well, quite simply, how a recession is going to drive even more capital into gold. We're seeing it with the charts. They're already telling us the capital is going to flow into gold and the other precious metals. But behind that, or going a little bit deeper, the cause or the reason is that we are going to have a recession and we're going to see big rate cuts coming. Maybe not necessarily in the next month or two, but it's coming down the road. And that is going to drive the next wave higher in gold and precious metals. We've got a couple charts for you today. Let's get right to it. Okay, so let's talk about the odds of a recession. So the betting market, this is from Polytrade, 62% last I checked, was a little bit higher, looks like a day or two ago. 62%, this has gone up quite a bit. All these recession odds, by the time they get to 70 or 80%, it's pretty much a foregone conclusion. If we look at the masters of the universe, Goldman Sachs, they moved, so I guess last week, they upped their recession odds from 20% to 35%. Now they've increased that from 35% to 45%. I don't know what models these people are using, but you see these minor increases in the odds. It seems like it's higher than 45% at this point. I would trust the betting market more. It's just Goldman Sachs, they're clearly hedging their bets. So all these, in JP Morgan too. So let's see, they are now at a 60% chance of the global economy entering recession by the end of the year, up from 40%. Basically, the key to know with these odds is that by the time they get to 70, 75, or 80%, like you're going to have a recession. So right now, we have almost zero wiggle room. Like we're at the point where if any of these odds just make another leg higher, that's a foregone conclusion. So we're on the brink now with the odds. Because again, I'm belaboring the point, beating a dead horse. By the time there's 75, 80%, recession has come. So something to keep in mind when you see all these recession odds. I mean, it would only be news if you actually see the odds go down. If someone came out and said, oh, well, our model says the odds are plunging, but that's not happening. Okay, so let me get to the next chart. So here we have gold against the 60-40 portfolio, gold against the S&P 500. Then we have the yield curve here, the difference between the 10s and 2s. So the 10-year yield minus the 2-year yield, and steepening is what is bullish for gold. I mean, you can see here's the start of a steepening, a little bit steepening here, big steepening here before a recession, big steepening here in the 2000s around a recession, also steepening here in the early 90s. And then, of course, you had here with the double dip recession. And if you go back and look, I believe the steepening actually happened a little late in the inflationary 70s and 73, 74. So this big breakout here, gold against the 60-40, gold against the S&P 500, that happened before you got the steepening. But nevertheless, the point is clear that this breakout here, and then this huge breakout here, these were all accompanied by a recession. You know, this one was basically happening around that time. And who knows? I mean, we're probably going to look back and maybe this breakout like this one happened when the recession started, whereas this one happened a little bit before. But the point is, same thing with gold against the S&P. You see these breakouts, gold breaking out in real terms, that these big breakouts, they coincide basically with a recession in a significant downturn in the economy. And so the yield curve is kind of the confirming indicator here. Remember, when you see a steepening like this, when you see the yield curve go from negative to positive, and then it keeps going higher, it doesn't meander around like this. It goes way higher like this. That is a signal of a recession. So looking at the yield curve now, I mean, it started to move higher. It like I said, based on the recession odds, the yield curve is up against the wall. This thing starts to move higher. It's basically almost giving you 100% confirmation that we're in a recession. So that's where we are with that. And this is an updated chart of the gold market share of all the gold ETFs. So we're looking at all the assets in the gold ETFs divided by all ETF assets. Great chart from Callum Thomas at Top Down Charts. And this is gold against the 60-40. The only other person who's shown a gold against the 60-40 chart, and just like mine, big breakout here. And here's the implied allocation to gold. Look, it's moved up a little bit, but look how much more room there is for this thing to move. I mean, this is the COVID peak. Not even close to that yet, much less secular bull market peak. So we have a recession coming. It's very likely. In capital, more and more of it is going to move into gold, precious metals, miners, silver. And this chart and others, including gold against the 60-40, this is just getting started. This is a major, major shift towards precious metals. It's just getting started. So, and there's a lot of room to move. That's what we need to know and understand. Okay, last chart here. We plot various markets and indicators here. The yield curve is here in the middle, 10s minus 2s. Here's the 2-year right here, 10-year right here. This is a 400-day moving average, 400-day. I like to use the 400-day in addition to the 200. S&P, this is the 200-day. Here's gold against the S&P 500. Gold here, this is the 200-day moving average. Remember what I've said about that. Gold coming back and testing the 200-day over the next couple months. Look for that because that could mark a really, really significant bottom in precious metals. I circled here looking at these breakouts. So the first one was gold in nominal terms. Then the next one was the yield curve breaking above zero or steepening above zero. And then the most recent one was gold breaking out against the stock market. So I think the next big move between these could be the yield curve, 10-year minus the 2. Look at this. I mean, this kind of been trending higher, but, not too strong, perking up a little bit here. Are we about to see this thing go like that? Or maybe like that? Because that would basically confirm it's pretty apt. I don't know if you could hear the siren in the background, but if you hear the siren, I don't need to say anything else because that's what it means for the economy and the stock market. If this thing moves like this. Yeah. And by the way, that would be really bullish for gold and precious metals, as you already know. And so that's one thing I'm keeping an eye on here, the 10-year yield. Now, with this stock market crash, the market from top to bottom was down 21%, but the 10-year yield didn't budge. It didn't move lower that much. It's still above 4%. But nevertheless, there's still a risk here that eventually, if this loses this support here, maybe you see a move where it falls towards 3%. So I don't think it's out of the woods yet. Now, the stock market down to, what is that, 5,000 today? I mean, it did trade lower. It rallied. The 200-day moving average is at 57.58, it looks like. So as far as a bear market rally, that's going to be the key, the 200-day moving average. And a lot of times, rallying back to the 200-day moving average and failing when the stock market does that, that is a major sell signal or a big worrisome sign. So what else we got here? I touched on the yield curve, gold against the S&P. Oh yeah, so there's this. You have this lateral support here, just above 4,500. The 40-month moving average, I believe, is at 4,700. So there is some strong support there. Probably got pretty close to it intraday, but keep an eye on this. As far as the next leg down, if we didn't hit a short-term bottom today. And I don't want to belabor the point. I think I could sum it all up by saying, watch the yield curve, because if this thing keeps moving and starts accelerating to the upside, that means rate cuts are imminent. But also means the 10-year is probably breaking down. And again, that means rate cuts are coming, and that could potentially coincide with the next low in gold and precious metals. So that's where we are, people. Really, really good setup in precious metals, gold especially. Everything looks really, really good. And just let the turmoil be, let it happen. Precious metals are going to come out the other side unscathed and fantastic and ready for that next big leg higher. Thank you so much for tuning in. Leave a comment. Let me know what you think. And I hope you have a great rest of the week. And I'll talk to you guys again in the next video.